What's going on with Snowflake stock? I mean, the stock hit an all-time high over $400 in towards the end of 2021 before absolutely collapsing close to $100. So it lost nearly three-fourths of its market value in a short period of time. Since then, the stock price has been trading in a range up and down, not really catching a bid higher or going much lower than the low $100 level. So in this video, I'm going to look at Snowflake's fourth quarter earnings call with analysts and try and figure out what's going on with Snowflake stock, why it's range bound, and what the prospects are. So I don't think you're going to want to miss that if you're interested in Snowflake stock. It's going to provide a lot of insights. So let's get into that. Starting with the CEO, Frank Slootman, he talks about the fourth quarter product revenue, which grew 54% year over year. And for the entire fiscal year, revenue grew 70%. So growth in the fourth quarter was much slower than growth for the year. So what I notice is a downward trending revenue growth rate. Total revenue was 1.9 billion for its fiscal year. Fourth quarter net revenue retention was 158%. What that means is that existing customers with Snowflake that had accounts with them in the fourth quarter of last year, they're spending 58% more this year than they were last year. In other words, if they spent $100 last year, they spent $158 this year. So they're increasing their spend with Snowflake, and that demonstrates to me that Snowflake's clients are seeing good value in spending their money with Snowflake. Otherwise, they wouldn't increase their spending. The CEO goes on to say they're on track for $10 billion in revenue in fiscal 2029. So this is a big, massive, ambitious long-term goal here to go from 1.9 billion in their fiscal 2023 and 5x that revenue by their fiscal year 2029. So in 6 years, in 6 fiscal years, they plan to 5x their revenue, and they're saying that they're on target to achieve that goal. And if they do achieve this goal relatively efficiently, effectively, that could mean a massive boost to the stock price. What do I mean by efficiently and effectively? Well, that means don't just focus on this 10 billion revenue goal and throw all the costs out the window, right? It'll be easy to reach 10 billion if you just spend massively just on your growth ambitions, right? Higher sales, lower your prices, give favorable credit terms, throw everything at this goal of reaching $10 billion. But then that won't be effective or efficient if that's going to lead to massive losses on the bottom line, massive cash outflows, needing to raise debt in order to support this goal, needing to sell additional stock to hit this goal. So it's not just a matter of hitting the 10 billion revenue goal, it's hitting the 10 billion revenue goal responsibly, effectively. That's going to determine if the stock price responds in kind to the growth in the revenue, right? That's if they do it effectively, the stock price could rise 5x, just like the revenue rises 5x. But only if they can do that effectively. That's the difficult part, is the execution. Going on, it says during Q4, Snowpark for Python reached general availability status. So a new product launch. Early traction is promising. So far, 20% of customers have now tried Snowpark. So good news so far, new product launch, and it's going good. If it continues on this trend, I would like to see more good news in the next quarter, an increase in that percentage, perhaps some sales figures as to how much sales it's generating, not just how many customers are trying it. So interesting, good start. I want to see more progress on that front. In Q4, they also announced their intent to acquire Mobileye Net Snow Convert, and this is going to help. Their conversion tools are going to enable migration from legacy platforms. So, in essence, this is what Snowflake is trying to do, right? They're trying to get corporations away from their legacy, their older platforms, and come on to Snowflake's newer platform. And this acquisition is going to help the conversion happen, right? It's going to help reduce friction. It's going to help make the transition easier. And in essence, that should alleviate some friction between onboarding some of these corporations. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. Now the CFO jumps on to make a few comments here, and Michael Scarpelli, I hope I announced that right, said that they have $3.7 billion in RPO. RPO is jargon and it stands for remaining performance obligations. These are, in essence, contracts that the company has signed and they will turn into revenue once their clients use that service. So when they sign a contract, they're not allowed to count that as revenue just yet. They count that as revenue when their clients use up the service that they signed up for. Okay, and initially when they sign up for it, that goes in the books as a performance obligation or unearned revenue or billings. There's a bunch of different terms for it, but it all stands for essentially the same thing, which is you sign a contract with the client. Let's say over 6 months, we're going to use up this much service. And as the time goes on and as they use up that service, it then turns into revenue. You can't just count it as revenue once you sign that deal. All right, that's just how generally accepted accounting principles works. So they accept to recognize 55% of that in the next 12 months. Okay, so of this 3.7 billion, they plan to recognize about 1.9 billion of that, or 2 billion of that, over the next 12 months, and the rest of that over the longer term. We continue to see the greatest contribution from the financial services, media, and entertainment verticals. So these are the industries that Snowflake is generating the greatest amount of sales from. Their Q4 bookings underperformed versus their expectations. The pipeline conversion in the final 2 weeks of the quarter was really bad. International territories was what drove the largest underperformance. And that's understandable, right? That's where there is the greatest amount of uncertainty, is in international regions outside of the US, with the war in Ukraine, with the economic reopening in China, with the inflation problems in Europe, and all of the different issues going on in economies outside of the US. There is more uncertainty than where inside of the US the main concern is really inflation and how quickly inflation is going to moderate depending on how quickly the Federal Reserve raises interest rates. And I will end with these final comments from the CFO, including their guidance. So, talking about, they ended the quarter with a strong cash position, $5.1 billion in cash, and no debt. So, a really strong balance sheet for Snowflake. Excellent balance sheet. $5 billion in cash, no debt. And they expanded their partnership with AWS. This is Amazon Web Services. Over the next 5 years, more than doubling their previous commitments to 2.5 billion. 2.5 billion, really good news. As part of the new agreement, AWS is committed to support joint market efforts and more favorable pricing. That's good news. All right, so then the CFO gives guidance for the next quarter and the next year, expecting product revenue between 568 million, 573 million for the next quarter, which would be growth of just 44%, and then for the full year, revenue of about 2.7 billion, representing growth of just 40%. Now I say just, as if 40% growth is not excellent. 40% growth is excellent, don't get me wrong. But the trouble is that Snowflake growth rate is going like this. It's decelerating. And that's not good news for the stock price, and that's not good news for the company, especially because the stock is not cheap. It's trading at an expensive growth dependent valuation. And so as the growth rate is slowing, investors are, getting less enthusiastic about Snowflake stock. And so we can kind of now understand why Snowflake stock is kind of just trading in a range and not really taking off. And it's because the revenue growth is slowing. It's seeing a lot of uncertainty from its clients. They're decreasing their spend, they're being more cautious. And so, for that reason, Snowflake's revenue is slowing, revenue growth is slowing. And so, investors are not really excited about the stock as they were a year or 2 years ago, when the revenue growth, not only was revenue growth really high, but revenue growth was accelerating. So it was growing and then growing at a faster rate. Now it's growing, but it's growing at a slower and slower and slower rate. And when investors see that trend, they become less enthusiastic about the stock. All right, so I hope this video has provided some insights into what's going on with Snowflake stock, an excellent growth company that has several years of growth runway to go. That's all I've got for this video. As always, I appreciate your viewership, and I'm going to add a few videos at the end of this one that I think you'll enjoy. So please click on one of those, and I'll see you over there.